Arnaut, my name is Blake. Nice to meet you.
Hey Blake, nice to meet you.
Hey. I was looking at your site, trying to get familiar with you, and like I said, I've heard your voice here. But tell us, as traders, tell us a little bit about what you do at Intelligent Invest. And here, I'm gonna bring over your site just because I was on it a little bit ago. Tell us what you do and how you approach the markets and what's your approach to the markets.
All right. Well, thanks for having me on the show, Blake. And quite a surprise to have you instead of Dale. And it's really cool to be able to, to,
he's
to talk
he's on he's
talk
on
with you.
holiday, and then he's like, Blake, I gotta go to Dana Point and enjoy the weather there next week. Can you cover? And I'm like, absolutely. I get to meet all these great people. So it's nice to meet you as well.
Awesome. Um, Maybe it's easier if I can share my screen. Would that be possible?
Absolutely.
Or
Go free
let's
to.
see.
Here, let me go ahead and stop sharing. There you go.
Okay. Give me 1 second while we click through the boxes here. Um, So yeah, you went through my website, and what I do is provide people with insights in financial markets related to, of course, the major stock market indexes. There's a very quick video people can watch. I'm not going to click on it. It's about a minute and a half long that will really briefly explain what I do, and that is primarily used for my forecasting, the Elliott wave theory. As well as regular technical analysis, with divergences, trend lines, support and resistance, technical indicators, all those things. I look also at timing, like seasonality, and try to bring all those together to come to the most likely path the market is going to take with the Elliott wave as the primary analytical tool. And for those that are unfamiliar with the Elliott wave, you can click on my menu on my website, go to education and an Elliott wave principle, and it will very briefly explain to you, because this is based on other people's work, that is hundreds and hundreds of pages of work, where it explains that financial markets, including, for example, the forexes that you guys were talking about earlier, move in predictable patterns. In this case, it's called waves. It's proposed by Mr. Elliott in the 1900s. And you get most of the time 5 waves higher, and any corrective structure then after a bull run has happened is often in 3 waves. And this can happen on any time frame, from
So,
minutes to
uh,
days, weeks, months, years. So it's
can
very
I
a
ask you? Can
self-similar
I?
pattern.
Do you mind if I ask a question here? Because obviously, when you're looking at equities at all-time highs right now, and
Right.
I actually just met with another Elliotician on Friday, named Jim from Macro Tides. He believes we just completed wave 3 of 5 in equities. Do you see the same thing, or do you think
I
does your count telling us that we're completing wave 5 at this point?
No, I think we're in completing a third wave, and I'll get to that in a moment of
Okay,
how
great.
I'm looking at it. And I thought, what theme do I give to today's talk? When I do webcasts for my members, so folks can sign up for my newsletter that they will get daily. And if you don't want to hear me analyze the markets, you think, this guy, whatever. I also provide what I call trading services. So these will just send out trade alerts, as you can do with it what you want. But those are based on models that trade the markets on based on strength, momentum, trend changes, and all those things. And we have some very excellent returns, and all you get is just a trade alert. Super simple. Right? I always call this is maybe for people that want to start trading. It will give you stop losses and when to buy, when to sell. Super easy. Not based on Elliott wave, just pure, a mechanical trading system. So that's another part. And I do no analysis, just the trading systems do their signals every single day. Um, so that's also something people can look at. You can supplement, of course, my analysis with this. And sometimes my trading models are right, and other times I'm right, or both are right, right? It always goes back and forth. So as I then do webcasts for my members twice a week, I always wonder, what kind of themes should I do? And this is a famous quote from the movie Anchorman. I don't know if you're familiar with it. It's with this comedian, and he plays Ron Burgundy, anchor man from San Diego, and there's a famous scene where one of his colleagues says they've done studies, 60% of the time it works every time, and that's with market analysis. Whatever we throw at it, it can never be right all the time. Whatever layer of analysis we add to it, at some point you're always dealing with probabilities because it's a complex system, and a complex system can simply not be predicted all the time. And that's kind of the theme I want to present, because it provides people with realistic expectations on, all right, well, this guy says this, and this lady says that, and he says sus, and I say so. So which is it? Well, sometimes you're all right, and sometimes you're all wrong, and that's just something we need to take into consideration. That things are fluid and might change a bit, but I agree. I think we're wrapping up a third wave, and before I get there, allow me to go back in time. This is, I think, from my last interview. That was in November last year with Dale, where I said the S&P 500 would go to 4,800, 5,000 plus. So that's been a pretty good forecast, and we got there pretty rapidly. And I think we're now at 5,300, something around there. And what we're now tracking is either this is completing a what we call irregular B wave, what is a flat correction, or we're still in this third wave. Those are my two scenarios. So this is a B wave that will target around 5,350, and then we get a decline, which you can also say, all right, that the next decline will be the fourth wave. So it's a little bit interpretive. How are you going to interpret the previous decline versus this current rally? And this current rally, honestly, as long as it even stays above Friday's low, we should be able to target somewhere around 5,350. And this is what we then call a irregular B wave, and they've happened before. And irregular B waves tend to kind of target when the third wave here on the left-hand side misses its upside target. I remember in March of this year, I was looking for the S&P 500 to reach about 53.45, 53.95, somewhere around there, I believe. I don't have the number on the screen here. But it failed. So I was kind of looking for it and thought, oh, we're going to get there. But it started to break down, and we got the decline in April. And now we're here. And this often tends to happen in the fourth wave. When the third wave doesn't get there, third waves, right, based on Fibonacci extensions and all that stuff, have a certain target and didn't get there. Then the B wave, as we say, often does the trick. And if we zoom out, and we have this on a daily time frame as well, an A, a B, and then we get the C wave, or this wave 4. So yes, you can count it still as being in the third wave. Another way to look at it, again, you're right, you're interpreting the price action. Let me see if I can find the screen. Is this being a very large ending diagonal. So this wave 3 is still underway. It's simply subdividing in another ABC, because if you're in the diagonal of the ending type, it means this is the last fifth wave here in blue. It's going to be all this overlapping ABCs.
Should take us maybe one more high as we go into the summer then.
Yeah, pretty much. So this black wave 3 should be wrapping up over the next few days. That's kind of the idea here. And this is a chart on the monthly time frame. And one thing that definitely keeps me on my toes is this insane negative divergence we see on the technical indicators, on the MACD, on money flow. Money flow I find very important because liquidity drives markets. But we also know, on the other hand, negative divergence is, or any divergence is only divergence till it's not. And one way to look at it is here, back to the hourly chart. We had this negative divergence here on the RSI 5, on MACD, even on the money flow. And you need to take that into account, right? You're also a market analyst, and those things do matter, but it's not something you want to hang your hat on. And it just, the market completely ignored it, right? We've got this very strong rally based on, I think, a little weaker than expected inflation data. At least it wasn't stronger than expected. That's the motto these days. Is as long as the inflation data is not stronger than expected, then we should see the Fed lower rates soon. But I've constantly said since the beginning of this year, I don't think we'll see a rate decrease. If anything, we might see a rate increase. But so far, I've not been proven wrong. And regardless, the market keeps rallying. But most of the time in my work, I don't really even mention the Federal Reserve or anything, though I do remember here on the Fed meeting day, early May, I sent out an alert half an hour before the Federal Reserve would meet. And I said, hey, we've completed 5 waves. We're going to look here for a bounce to about 5,050 plus or minus 10. And we've got 5,095. And then we should see a decline. And the decline, both the rally and decline worked. So that was great. That was a very easy trade. And then I was actually looking for lower prices going forward over time. And one of the reasons was, if you look at seasonality, let me refresh this chart. So this is seasonality of the S&P 500 for only election years. And it kind of had a dip here, April 20th. And I think we got a dip here, April 19, somewhere around there. And then we should see a rally into April 27. And we got that rally here into April, I think 26, 29, somewhere around there. So far, so good. Was following it. And then we should see this decline on average, right? Seasonality on average. And it didn't happen. Instead, yes, we dropped into May 3, May 4, I believe it was. Again here by the Fed meeting. So far, 3 out of 3 we got correct. And then all of a sudden, the market started to diverge. It did not decline into the end of May because it should bottom here around May 22, 26. Well, what did it do instead? It rallied. So you can see here, right? So 60% of the time, it works all the time. We nailed the low on the timing basis. We nailed it. So these are forecasted target zones here. On the pricing basis, all that stuff. But then on the timing basis, all of a sudden it starts to do something else. And that's why I always say, it's never 100% reliable. Anything you throw at it. So 60%.
Well, yeah, it's the markets. I mean, it's all about probabilities, and you're definitely going to get a lot wrong, and it's managing risk.
Of course. Oh yeah.
So
it's managing risk.
So Arnaud, let me ask you this. You mentioned a little bit about how you were feeling about the Fed. How much let's just say macro analysis factors into what you're seeing from a technical point of view?
Not too much, but big tech earnings, the big guys. I think we have NVIDIA coming up on Wednesday. They matter. They absolutely matter. So if I see a wave count that starts to complete, even from a NVIDIA point of view, of course, I track NVIDIA as well. Then I definitely do mention it and say, we got big tech earnings coming up. We're going to have the Federal Reserve meeting coming up. Fed speakers throughout the week, not too much. And of course, the inflation data, those do matter, absolutely. And then I do try to reanalyze what I have. Is what I have really correct? And if not, then I will adjust. But I always tell my members, we have certain price levels above or below which a certain wave count, either be bearish or bullish, is invalidated. So here I have these levels, and I do mention it that we were going to have the CPI data when it was last week on Tuesday or Wednesday. I do mention it, so it's time to get cautious. Watch those price levels because they do matter. Absolutely.
Yeah. Okay. I mean, so here to give you maybe a good example, and maybe you can add some color to this. I have a 17-year-old son, my youngest, who's I'm teaching him how to trade. And one of the things that I tell him is, look, when you're trading around price, you got to know where people are wrong. And as long as you know where people are wrong, that's like your biggest edge that you can have. And and so so when you're looking at price action and you're watching it, how does that factor in, your markets, because in your trading, because you can say, well, I don't know if I really want to get long up here. I just watched the S&P rally 8% over the course of the last month and a half. I mean, do I really want to be chasing it up here? Do you ask those questions quite a bit?
Oh, absolutely. And I do write it almost daily. Make sure you know your risk reward, especially from a time frame perspective. Are you in it for just day trading, or are you in it for swing trading or long-term investing? Is this then the right time to buy? And I always say be very cautious, because we're really high up here. But from a day trading perspective, there's still plenty to be made. I don't think you should be too much worried about where we currently are, as long as as you said, where are we going to get wrong? And that's where I then start pointing out, like, okay, I still think we can move higher unless we start breaking below these levels. So those levels, right, depending on your risk appetite, you can use as a stop loss, for example.
Yeah.
And sometimes you do get whipsawed, of course, it happens. But otherwise, yeah, always know your trading time frame. Some people are in it for very short term, and others are in it for the very long term. But even for the very long term, please ratchet up those stops. Take profits along the way. It's fine. You can always catch the next bus. If you say, "Wow, man, I sold it
That's
for
right. That's right.
thousands," well, then just catch the next bus. In the end, as long as you're making good money, it's not about trying to catch 100% of the move. That's not what we're in for. But you want to catch as much of it as possible. And if you get 60, 70% of it, I think you're doing really, really well. And if you have those realistic expectations, I think you'll do great. But again, know below or above which you're wrong. And the current market has been a rally. As you said, it's been rallying. So we continue to view it as a rally, be it either as a B wave here or as a, let me show you that, as a continuing much longer impulse, whatever way we interpret it. Make sure you know below which this rally is going to tell us it's over, right? The market is going to tell us at some point this rally is over. So we have a version where we say, you know what, now we're in some sort of 3, 4, 5 type of setup, right? So the market keeps subdividing higher. Even though, as you can see, this wave is kind of starting to run a little bit out of room, out of waves to go. But this good target 4,000, for example. But then we keep raising our levels where we say this is wrong. As you can see, this is from I think it was on Thursday I presented it. I was out traveling on Friday to a wedding, and I couldn't do an update on over the weekend. I came back late last night, so if I still sound a little tired, that's why. So now we keep raising those levels, right? Because the market keeps moving higher, and as long as it does,
you got to respect it. You got to respect it.
Yeah.
All right.
Yeah.
Yeah. Well, hey, Arnaut, I want to say it really nice meeting you. I'm actually I just followed you. Make sure that you all follow Arnaut on Twitter. You're at Intel with double L _invest on Twitter. And Arnaut, I'm going to reach out to you via Trader Summit and bring you on as an interview sometime. Sound good?
That sounds great, Blake. That would be wonderful.
Arnaut, really nice to meet you. And folks, this has been Arnaut with Intelligent Invest. I'm gonna go ahead and sign off here, but Arnaut, I'm gonna be reaching out to you and bring you on, like I said, Trader Summit. Thank you so much for spending your time with us today.
Thank you for having me, Blake. It was really nice talking to you.
Same here. All right, traders. Remember, Dale's going to be out all week, but I'll see you tomorrow morning on the Face Show. Thanks everybody for tuning in, and have a great Monday. Tomorrow's going to be really, really busy with Canadian CPI. So thanks everybody. Have a great trading day. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.